Hi, I'm Peter Rose, founder of Longwood Currency Trading. Today's video is titled Casual Thoughts About Forex Trading and Coffee. I think that just talking about Forex itself is interesting for those of you who are interested in Forex. And for those who are just looking for some magic information to make their trading better or whatever, then probably not interested in this video. So we'll catch you on the next one. And why coffee? Well, this is early May of 2025, and as you can see out the window, hopefully that's showing up, it's a rather rainy and dreary day out. In fact, let's go out and see. All right. Not scaring the birds away. It's been raining all night, so there's enough there to get the brook ripping a little bit. So that's about the, well, what about the coffee? Okay, well, right here is the water getting ready for coffee. Why am I doing it that way? Why not use a Keurig or something? Okay, this is French press, and my nephew got us a French press set up, which is, let's see if I can get the, there it is right there, ready to go. So as the water warms up, then you pour the water into the coffee, and you got to let it sit for 6 minutes, which is just mind crushing when you need a cup of coffee. And then you press it down, and I'll go through the whole thing with you as we go through talking about general thoughts on Forex. In getting involved in the Forex market, you've had to have an interest in what the Forex market is. You can't have some fool saying, oh, well, you ought to do Forex because I do it and I made $12,000 this week. There's a specific reason that the Forex market exists. I mean, you see all these guys coming into Forex and they can't figure it out. They think that these guys are doing stuff with magic and they can't do it. And so they go off to crypto where everybody's sing-songing along and drinking the Kool-Aid, and that's fine. The Forex market is a real market. It's something like $4.7 trillion or 6.7 trillion dollars a day. It dwarfs the stock markets. 6.7 trillion. That's a lot of money trading hands. Well, what is that? It's economic commerce between the two pair countries. I want to buy some engine parts. I'm in the UK, and I want to buy some engine parts from the United States. So I got to sell pounds and buy dollars in order to do that, because I'm not. The US isn't going to take pounds to buy their engine parts, to buy your engine parts. So you sell pounds and buy dollars. That's what you're doing. So the Forex market isn't going to go away. It's based on the commerce between two countries and the exchange of the differential between their two currency values. And those currency values form the pair. I got the pound value here and I got the dollar value here. So 1 pound buys X number of US dollars. That's what it's about. So if the pound is $1.24, it means that if I go over to the UK as a US person and I can buy a loaf of bread here for $1, it's going to cost me $1.24 if I go over to the UK and buy that same piece of bread. That's how you get the price that you're trading. If you don't back up and look at this stuff, and I'm not talking about beginner stuff, what's a pip, how do you size your bank, Bollinger Bands, and all the rest of the shit. I'm talking about the foundation that the Forex market is based on. What is it based on? It's based on economic commerce. That's a real thing. Right now, what's crypto based on? Nothing. Oh, see that? That's my water ready. Let's see if the water's boiling. Not yet, so we're going to let it, we don't want it to boil, but we want it to come up a little bit. The crypto market is based right now on somebody buying it, hoping that somebody will buy it back from them later at a higher price. There's no intrinsic value to it. If you don't have some fool buying it because they're hoping that somebody else will buy it from them, it's not going to do anything. Yes, you can take your crypto and buy green beans or generators or whatever with it. But that doesn't mean that the crypto has any value of itself. Gold has value in itself because it's a rare mineral. Oh, you could say, well, crypto is rare. Well, I'm not going to get into a debate with you because right now it's the currency market that's creating this international commerce. Someday, if the crypto takes over as what they call the reserve currency, you're going to have to base that on something. And so maybe that'll happen. But it's not going to happen today, and it's not going to happen in 5 years, because it would require every country in the world to adopt some standard of exchange. We get pissed off at our next door neighbor. You think the whole country is going to be able to say, oh yeah, I'll give up my currency for somebody else. Oh, the Euro guys did that, and they're still fighting about that. In fact, Britain broke away from the Euro. I said, I'm not paying for these countries that aren't taking care of their economics. We're just going to separate away from that. And they did Brexit. So, you know, I'm not real sure that it's necessary to have this worldwide currency. So there's a meaning, there's a basis, what we call a use case, that we say in software engineering, for the currency market itself. And that's what's of interest. That's a good thing that you know that, but it's also a bad thing. For me, as an academic, I got a bachelor's in physics and a minor in math. I've done 40 years in real estate, software engineer for 33 years. You know my bio if you've been listening to my stuff. So I'm interested in stuff and how it all works. And so here's this massive market. And I studied that market from 2007 when I first found out about it until 2017, 18, something like that, when I opened my first large account. And it wasn't until 2012, I said, well, I'll try this trading thing, because I'd been writing computer simulations. It's a lot of fun doing that. And I said, well, maybe I can do this in real time. So I opened a couple of $1,000 mini account, and I lost that. Well, okay, let's try this again. A couple of $1,000 mini account, and I lost that. I thought, I need more education. So I went out, took courses, read books, not so much on the academic aspect of it, but other books on trading, because I'd read economics of the market and macroeconomics and all that kind of boring shit that if you're not interested in that, and you don't have to be interested in it to trade currencies. All you have to do is know how to trade. God. But the problem with the interestingness of the currency market as a market is that you can get wrapped up in the economics of it and the fundamentals of it and say, oh, the NFP just came out and the personal consumption index is this and the new housing starts as that, unemployment's coming out next week, and so I think therefore that blah, 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 blah is going to happen and price is going to go down. And that's the kiss of death, because that's like going up to the captain of a big ocean liner and saying, turn right, go to the starboard, turn right now, there's an iceberg there. He's not going to be able to get that boat out of the way because the boat's so big, it's so heavy, and people pay their ticket to keep on going in that direction. Maybe the iceberg isn't that big, and you sit around and debate about it until the boat hits the iceberg, but it's not going to turn. And just because the NFP does something crazy, oh, the market may swing a couple hundred pips in two directions and flutter around or whatever, but it doesn't necessarily establish a new major direction for maybe weeks until the current order flow, $6.7 trillion a day, that's what's able to be transacted, let alone how much orders out there are coming in to this funnel. And so it takes time to run through those orders. Once you run through those orders, people have paid. You know, if I'm buying stuff from, if I'm again in the UK and I'm buying stuff from the United States and the dollar is obviously going to go up because of these news releases and stuff, I may not be wanting to buy dollars after a certain point. And so I'm scrambling, I'm doing this, and then and then I'm going to stop. I'm going to start selling dollars because who could afford it? It's got to come down at some point for whatever reason. I mean, I'm just making this shit up as we go along talking here. because it's a casual thoughts. And then after several weeks, a new swing trend is established. And then after another week or so, 2 weeks, oh, it's not a swing. It's a new major trend direction. And so then off we go. So studying fundamentals, and this is after, again, I've been involved in studying the general financial markets since the mid to late 1970s. I'm an old guy. In looking at the various markets that are involved in not only the country, but in the world, and how these markets interact with each other, it's a fascinating thing. But once you try to figure that out from the economics standpoint, or what they call the fundamental standpoint of looking at the value of a company's stock, and then all of a sudden it comes out that the CEO has been siphoning off $10 million a month to his private funds, and they've been booking sales as net instead of gross, and all this kind of funny financing that these guys do, and then the stock opens the next day and it just disappears. You don't have that in the currency market because it's a big ocean liner. It's not a little motorboat. It's a big ocean liner. So there's some stability in the market if you can understand what the purpose of it is and how long things take to work. Does that mean your trades need to take long to work? No. In fact, it's my position that long-term position Forex trading shouldn't be done, because what's the point of that? What's the logic of that? Because you get these large swings. If you're a swing trader, you know all about that. You're going to go a couple of 100 pips, 500 pips, and it's going to turn around and come back the other way, 200 or 300 pips, and then it'll go back in the major trend. If you're looking at a major trend that's going to go for a couple of years, those swings will be 600, 800 pips. And so you get caught on the wrong side of that and are hanging through it because you're convinced that you understand the fundamentals, and you're going to take a 600 pip hit. We just went through a period where I'm watching the charts and I got out, I lost some money, and thing continued to go in the direction that I fundamentally didn't think it should go in. It went 800 pips. Now I got caught 200 pips and lost, but it went another 600 pips, 700 pips, and then it swung around and came back. So in looking at fundamental analysis in the currency market doesn't make sense, because you don't have a PhD in economics. You don't have a room full of physicists and mathematicians and business experts and economists and all that other stuff in order to make these judgments, because they need to make the judgments in the interbank market, because they need to determine what the value of the other guy's currency really is. We don't. We determine the value of the currency whether the fucking thing is, the line is going up or down. Which pair is in the going up part? Which part of the pair is in the going down part? That's all we need to know. So you say, oh, well, technical analysis, that must be something that's going to work. Really? Fibonacci's? Look, I got a degree in physics. I'll tell you right now, Fibonacci's have absolutely nothing to do with the currency market or any market at all. It's a mathematical construct that describes certain things in nature, tree rings, rabbit population growth, but not currency prices. Bollinger Bands, RSI, oversold indicators, stochastics. What are all those things based on? They're all based on past price action. So yes, the currency market as a whole is like a big ocean liner, but that doesn't mean that you don't have, because the currency market is dynamic, you don't have 30 or 40 pip retracements on a daily basis. So you're playing on a 5-minute chart, and it'll go up 20 pips and it'll come back 10. And it'll go up 40 pips and it'll come back 10 or come back 20 or come back 30 and then it'll go back up. So even though at the end of the day you've gone 80 to 120 pips on an ATR, you might have got there with 3, 4, 5, or 6 20 pip retracements. And if you get 5 of the 20 pip retracements wrong, you've lost 100% of your bank. I'm just saying that when you're thinking about these guys that are talking about trading based on technicals, it doesn't make any sense from a mathematical standpoint. I mean, look, I did computer simulations where that was the mathematics of it. I wrote the equations of Brownian motion against the stock market. It all works out. It's all great. It's great theoretical stuff. But it doesn't hold up when you have crazy people at the other end of the phone line making irrational decisions. There's a famous quote that the stock market will remain irrational longer than you will remain solvent. And why? Because you get your mind set on the fact that this should happen. But that's not the case in financial markets. Should doesn't count. And particularly in the currency market because of the way that it's structured. And so you have to be really careful about the belief system that you have. I hear my water boiling. Let's check that out. Okay, check the water. Here's our French press. The reason I'm doing French press is because you're going to let the grounds in the water sit in here for 6 minutes. Now, I just finished my breakfast. I've talked to you a little bit. So the water's warm. I'll get this thing going, and then we'll see about continuing our discussion. All right, I have my container in hand. We got to go in the other room here and get the coffee beans going. All right. Pour a little water in there. And you got to stir it up so you don't, otherwise the grounds get hard at the bottom and they're really not floating around in the water. And you want them to float around in the water. Isn't this thrilling? Watching me make French press. But it takes patience in order to make the coffee taste as good as it should. Now, I don't have to know anything about the chemistry of coffee. I don't have to know anything about anything. I just need a recipe. My nephew gave me the recipe. Heat the water up, pour it into the grounds, let it sit for 6 minutes, and then compress it down and do that. So when that gets ready to do that, we'll take a break and we'll watch the final episode of the coffee. But that has to do with trading. See, if trading is something that people do, then other things that people do that they're successful at, they should be able to bring that to bear into the currency market. Now, I've had my problems because of my 40 years in real estate, and I tried to bring those principles of risk management into the currency market, and I lost well over 6 figures. Because of that. But you learn. The idea is that there's no recipe out there that said, if you think this way and you have these issues, you should do this. There wasn't anything like that because no one teaches currency trading the way that it should be taught, in harmony with the nature around them, as opposed to them just thinking that Fibonacci is going to give them the answers that they want, or somebody's system or strategy is going to do it, and they're going to, all that sort of stuff. You have to make the recipe up the way that you think that it should be, based on sound principles of the market that you're trading, because you're going to trade currencies differently than you would commodities. Now, you could learn how to trade commodities and come into the currency market and fall flat on your face. Like I fell flat on my face from coming from real estate. I retired a millionaire because of my real estate investing, and I came in and blew out in currency trading because of those principles. So I didn't recognize that in time. But because I've experienced all that stuff and I've done all this study, then the recipe that I've written for myself allows me to avoid that and allows me to work with students. And I can see in the student, I can say, oh, you're going to have this problem. Maybe my course is not the thing for you to take, because if you're not going to listen to me, if you're not going to listen to direction, and there's simple directions that you're not going to believe are that simple, because it's got to be harder than that. If you can make $100,000 a year trading currencies, it's got to be complicated, because my job that I make $100,000 or $40,000 or whatever it is really complicated. I have to work hard, and I had to go to college to get a degree in order to do it. But that's not the case in the currency market. Because of that complexity, and I'm talking to you as a physicist now, because of that complexity, it can also be perfect chaos, can be perfect order. It's just how you look at it and how you break the solution process down. Just like in making this coffee. I don't know anything about coffee grounds and all that stuff, grinding it. I use coffee grounds, grind them up. This is the consistency you want for coarse. This is what you do. My nephew said, put the water into the French press with the coffee beans in it, let it sit for 6 minutes, press it down, pour it out, boom, you're done. That's all I need to know. And I have a good cup of coffee. Now I can experiment a little bit with that. Well, how much water am I going to put in? How much coffee am I going to put in per 10 ounces of water? Do I need 6 minutes? Or with this particular ground of coffee, maybe I want to let it sit for 8 minutes. Or maybe I want to let it sit only for, because it's very thin, fine coffee, maybe I only want to let it sit for 4 minutes. That's the experimentation. But you're still brewing the coffee. You're still going to get a good cup of coffee. And so currency trading, if you look at the process of trading, if you've had good education, then you know that currency trading is done in a process. And that process has already been invented for you. In my case, I call it the life cycle of a currency position. I talk about that a lot in my videos. And timer's up. Let's press this. Let's do the press here. I'm gonna pardon my movement of the thing here. Let's see. Yep, there it is. Okay. One final stir. Just a light stir, because you don't want to bring it all up from the ground. The ground's up. And here's the little doodad that you got to put on there. And then my nephew said, just slowly push the plunger down. Just go slow. Isn't this thrilling? Talking about currency market, and we're doing French press coffee. All right, so that's done. Let's pour out a cup of coffee here. And now take the rest of it and pour it into this mason jar because I don't want it sitting the grounds that are going to be in there. So that's a story about currency markets and coffee. Very smooth, a lot smoother than you would think if you're coming out of a different environment. But hopefully you're still here, because that coffee exercise was done specifically for this video, because it is a manifestation of my core beliefs in trading and how you trade. You look at the nature around you. The rules for how nature governs things and holds things together are true for everything. Whether you're doing coffee, cutting the grass, or doing currency trading. It takes patience. It takes a solid base of rational, logical stuff that you need to know, but not so much stuff that is outside of the bounds. If you're going to plant daffodils in your garden like Sue does, she doesn't necessarily need to worry about the fact that the guy across the street is fixing cars in his garage, or that it's going to rain for 6 days straight in the state of Maine or in New Hampshire. All she needs to worry about is generally what's the weather like, so that she doesn't plan when it's too cold or wait too long. What's the soil got to be like right here? And you stick your fingers in the ground and you pull out something and you plant your seeds or whatever you're going to do. I don't know how to plant daffodils. They just seem to come up magically. Sue knows how to do that. I don't. But if I wanted to learn how to plant daffodils, I wouldn't go to a book and do internet research on all the fucking plants on the planet. I'd say, hey, I'd like to plant a daffodil out here. What's your recipe? How do you do that? And then she'd say, well, I do this and I do that. I was, oh, Mom, my back hurts. I'm not going to bend over to dig that hole. I'm going to sit down and dig the hole to plant those seeds. But I'm still doing a process, but I'm not trying to reinvent the wheel. And that's what the life cycle of a currency position, that's how I came to the life cycle of a currency position, was by losing a lot of money and saying, wait a minute, why did this happen? Oh, it's a complex problem. I was solving the wrong problem. And then I broke that problem into the 3 phases of the life cycle of a currency position: entry analysis, position management, and exit methodology. That's the recipe. And that's what I teach in my course, Fast Track course, because it works. Now, where I set my stops or the conditions that I use in order to have an entry go, those aren't the conditions that I'm going to teach somebody else. I'm going to teach them what's going on under the sheets, and you're going to need a rule to solve this. What conditions are important for you? How old are you? Are you 24 or are you 55? 54. It's going to be different. How you treat that trading process is going to be different. But the underlying rules and the conditions that the rules are based on don't change. You simply add a different value to that parameter. You don't change the parameter. You change the value that you're giving the parameter, and the rule has to know what to do with that change in the parameter. It's really simple. It sounds complicated. It sounds like, oh, well, you got a degree in physics and math. There's arithmetic involved in this, and that's the extent of it. And common sense. Why learn stuff that you don't need to learn? Because it's only going to confuse you. I studied the currency market as an academic exercise, writing simulation code against it and doing all kinds of complicated stuff from 2007 to 2012. I still wiped out a couple of mini accounts. I went in and got education. I took a couple of courses. I read trading books. I started to think about trading. I started to think about myself as a trader as opposed to an academic view. And I still lost a lot of money. And that's where the life cycle of a currency position came from. I didn't make it up. It's there. Those are the 3 problems you got to solve: entry analysis, position management, and exit methodology. I don't know anybody out there that has done that. All they want to do is base their net worth and their life on a Fibonacci or a Bollinger Band or an RSI combined with a Golden Cross. I mean, I just don't understand it. I don't get it. It doesn't make sense to me as a physicist or mathematician. If you're doing high frequency trading, you get away with that because you're more into the flow of the Brownian motion aspects of the market. And you're trading large sums of money and you're taking little picks off it, you can't lose. But for a retail trader with a $10,000 or a $30,000 or a couple $100,000 bank, you can't do that. And we definitely don't want to trade like the hedge funds and mutual fund guys, because they're making 20% a year on their money, which is really good. But why go through all that when you could do that in real estate or geez, if you can make 8% and not have any problem at all over the long term in a no-load index fund. But if you want to trade currencies, you have to understand that underlying market. It's complicated, so you need to make it simple. I did. I made it simple, the life cycle of a currency position. And then you write 3 rules. I got 3 rules. I wrote them down in 2017. I haven't changed them because they don't need to be changed. I've taught them to other people. It works. So that's all I can tell you. Don't complicate things. It's as simple as following the recipe for a cup of coffee. Man, that's good. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.